Passive investor is great, but what really passive investment tells you that no one can use his mind, right? Because it's passive. There's no thinking. I think we're in a new era of investment management. You can buy and hold forever, but it's not really smart because things change, right? The world changes. People bought the S&P index because there was not enough computing power to do it better. Dividend stocks and growth stocks, those terms are irrelevant once you use AI. Computers can do better than humans. The basic idea of investment is stay in the market. Don't try to time the market. Our machine is always fully on the market because we are not guessing what the markets will do. Invest all the money you have in equities in the market. Stay there forever. AI should take your fear down because AI creates more certainty and more data-driven scientific decision. It takes out the emotions of fear and greed because actually the biggest obstacle for people to make money is the fear and greed issue. Let science make you money. And I truly believe that today with AI and big data really is a step up in the way that anybody can make money.
Investors, welcome back to another go-round of Masters of the Market. Now, this week, I am incredibly excited to have on Eldad Tamir with me, who comes with over 30 years worth of iBanking experience, quite the public figure as well, with appearances on Shark Tank. Eldad, welcome to Masters of the Market, and I'll just throw the first question right over to you, as I always do. What is your story, and how did Finq come to be?
Okay, Ari, thank you. It's my pleasure being on your show. It's really an honor, and let's talk about Finq. I think I've been in this business for many years. So on one side, I've been in the asset management, wealth management side. On the other side, I've set up a lot of venture funds to invest in technology companies. And these two worlds kind of don't like each other for many, many years. And you can talk to an investment professional about high tech, and they leave me alone. And then you can talk to a genius engineer and talk to him about investment. He says, I don't know anything about it. So these two worlds coexisted within me. And I thought it was time to kind of shake hands between those two and create something which I believe is a kind of a breakthrough in the investment world. Is really to create, let science make you money. And I truly believe that today with AI and big data and the ability to build machines and collect tons of data and analyze them on a daily basis, on an hourly basis, really is a step up in the way that anybody can make money. A lot of people to date have kind of said, okay, I can do that in a hedge fund. And then you have those closed-end boxes that only very rich people can get into them. And me, together with my investor, have decided that we don't want that. We want to take the highest level of investment tools in the world and give access to everyone. So to change the world in that respect. So that's what we're doing.
Can I flat out ask, where did this idea for Finq come from? Did you have like an investment hiccup and you said, you know what, there's AI today. This is the answer. How did this come to be?
No, actually, it began many, many years ago about thinking about how analog the investment world is in comparison to other worlds like online shopping and Netflix and so on. And said, how come they would still, give our money to someone who knows really little? We can't really process a lot of data, who is a specialist in a certain field, and maybe other fields are much better. How come there's a ranking of stocks? One says buy, one says sell. And even with that, I don't want to know what to do because, buy stock, maybe there are other stocks which are better. Nothing of that analog world talked to me. And technology was growing. I was investing in really top-end high-tech companies. Well, there's a bridge here to gap, right? So let's do it. And, thoughts, at the end of the day, I'm an entrepreneur. I've set up a lot of companies in my life. I like the creating new stuff. It gives me a lot of energy and fun. So that's how it came along.
Can we zoom out and talk a little bit about your upbringing, personal life? Where did the investing mindset come from for you? Because, I mean, you have 30 years packed with iBanking experience, VCs. Where did the love for finance and investing come from?
Well, I've started off going to study economics just because I couldn't apprehend anything else. So economics was a bit undefined. So I said, okay, let's do that. I knew I didn't want to do a doctor or anything very specific. I like to search around and to free with my mind. And I grew up into becoming a consultant, management consulting firm like the McKinseys of the world, and then worked in different organization, investment bank, and so on, and decided to open my own shop. And if you like excitement, you like a lot of changes, you want to learn a lot of things, then you can find them in asset management and investment banking, right? You meet a lot of people, different areas. You can learn about everything because every company brings a new knowledge base to your mind. I need to wake up in the morning and do something which excites me. So that's where I built the business around my needs.
So then with that being said, when it comes to investing and then using the power of I want to ask you just straight out, is the financial industry as we know it leading to its own demise now with AI out? Like, are analysts necessary? Are, iBankers necessary with AI?
Well, investment bankers is kind of a schmoozing business, so I don't know about that yet. That will probably change as well, but definitely research analysts will continue to be an interesting, will exist. They will use different tools. But I think the most obvious for me is investment managers will be gone because an investment manager needs to process. He doesn't create the data, right? He buys data, he learns data, and gets decision based on the customer needs and the goals and everything else. Computer will do that 100 times better easily, right? If I need to collect data about the S&P stocks, I can't do that on a daily basis and analyze who's better on a daily basis. A computer could do that. So we don't have a chance against computers and AI that will, that will encompass a lot of data and process it and give us a decision. Any person, even hundreds of person can't do that computing power. So it's kind of, it's good or bad. I think it's good because people can make more money and the decision process will be easier and it can be given to anyone, not just the rich guys. So I think we're in a new era of investment management.
If you had to share with all the viewers out there the Finq elevator pitch, the 30 seconds on Finq, what would that elevator pitch be?
Well, Finq is an AI-based platform, investment platform that really creates a huge alpha on any given stock index by utilizing data and science. So it's very easy, it's accessible, it can be accessible to anyone. And using science to analyze stocks and buys and sells is really easy with Finq.
So I came across Finq and I started digging around the website and I got very excited. I mean, if there's any way to make investing easy, right? At first, for me, it was getting into dividend investing, it was having ETFs. And now I came across Finq, which seems to have just made investing a little bit more easier. But I want to ask you, because this is one of my big questions, like, okay, so you have the Finq products that are out there. And why would someone choose Finq over, say, just investing in the classic Warren Buffett answer of the S&P 500, set it and forget it? Why Finq?
Evolution, revolution. People bought the S&P index because there was not enough computing power to do it better, right? If I give you 500 stocks and I tell you it is passive investment, you don't need to do anything. We'll do the work for you. The computers will do the work for you, right? But we will check the 500 stocks on an hourly basis, on a daily basis, and tell you which one are the best, good ones, and which one are the worst ones, okay? So you don't need to buy 500. You can buy 10 stocks and 20 stocks that we rank the highest and do what we've done in the last 2 years is 2x on the S&P, right? So the proof is in the pudding, it's there. Think about it theoretically. The passive investment can be done in many ways. We're passive investment tools in a way that a passive is smart. It's a smart passive investment. It's not a stupid one. Just buying indexes is a stupid passive investment. We're kind of a smart passive investment. The machine will do you a much better return by looking at the stocks and choosing the best ones out of the 500.
What I was most blown away by on the website was actually taking a look at, say, like Finq First or Finq Full or any of the portfolios that you have. And what I saw was they're actually all outperforming the S&P, which leads to the question, how does Finq work? Like, how does it pick? How does it know? How do you know?
Okay, so how do we know? We don't know. We go out and learn, right? So look at stocks today. If I would ask you a theoretical question, what influences stocks, right? So I would say three things. And, I'm saying it easily now, but it took us some time to put it into these closets, right? So one closet would say what people are saying about the stocks, right? Because it's a market. If all the people saying Nvidia is a great stock, it's a great stock, you can buy it and hold it, and you'll make a lot of money out there. So that will increase the price of the stock. We have to measure that. How do you measure it? You look at what people say on TV, on what people say on YouTube, on what people say on blogs like you're having, what people say on social media, what's on there on the TV. We collect all of the data. So each point of data by itself is not much, but we combine all that data, you create the noise. So we know what the noise is in regard to each stocks in the S&P, for example. We can do it to any index, and we are doing it to any index. So that's one family. The other family is fundamentals. We put into our machines all the textbooks in the world to do the right evaluation of the stocks. And it's done on a daily basis because companies have announcements. They have, they have their financials out there in the market. They have announcements to make. Their stocks is going up and down. It's not enough to sit there once every month or once every year and look at the results. Humans do that because they can't do it any minute. Even if you put 100,000 people to do that on the stocks 500, they can't do it. But a computer can do it. So we're sitting on the computer, on the data, and seeing and every time evaluating which stock is better out of the 500 stocks based on fundamentals, on PEs, PEGs, PS, all those multiples and many others. And then the third one is we're taking what we call the professional wisdom, like research analysts, but then we don't just put them as it is. We say, okay, a publication that was published yesterday is much more digitally worth of value than the one published a year ago. So you combine that and put it into a machine and learn and see the results. And at the end of the day, you can look at us as a hub that really collects all the data needed in order to evaluate stocks and ranks them daily on a relative and continuous basis. This is a new level of investment management. From there, you can choose what you want. You can have top 10, top 20, bottom 10. If you look at if somebody wanted to short the S&P, we started 2 years ago publishing the data on a daily basis, by the way, so it's very transparent. Every transaction is published. If somebody wanted to short the S&P, he would have lost 36% because the S&P went up 36%. But if somebody shorted our worst 10 stocks over time, he made 14+%. So it's a difference of almost 50% on shorting the S&P. So it's a tool, it's an investment management portfolio. You can manage your money, you can buy the data and use it as a tool. But at the end of the day, it's a whole new level of how computers can do better than humans, unfortunately and fortunately in some cases. Yeah.
I'll take the latter as the answer, as fortunately.
I
Although
agree.
I have to say it's a bit scary. I mean, when I think about AI and investing for me to some sense, because as a traditional investor who loves piercing through research, right, and knowing the companies I'm invested in, like a tried and true Warren Buffett like investor, where it's like I'm going to buy this stock and hold on to it forever, quote unquote forever, in case something happens, right? The investment. But when it comes to Finq and using it to our advantage, I mean, it really is just this added little brain, I feel like, and it simplifies the whole process. But what it can't do is help me overcome if I'm, say, a newer investor or an investor who perhaps, invested in some meme stock or penny stock, lost all my money and have a bunch of fear now. What would you say to investors who are still afraid to get invested, but I mean, now you have AI working for you? What's the pitch there? Like, should we?
I would say AI should take your fear down because AI creates more certainty and more data-driven scientific decision. It takes out the emotions of fear and greed because actually the biggest obstacle for people to make money is the fear and greed issue, right? They're not based on data, right? So the more as humans we base decision on data and less on feelings, probably decision will be better, right?
Sure.
So if we can take out, and we all know that, but we are still humans, but if at least in investments, if we take out the emotions and the feeling, we'll make a better return in any decision we make. It's all based on data. If stock goes down and I get fearful and I sell the stock and nothing else has changed, I'm stupid, right? Because it's cheaper now, I can buy more. But that's why an automated AI machine should take down the fear of new investors because it's an ongoing basis. It doesn't just tell you buy and hold forever. You can buy and hold forever, but it's not really smart because things change, right? The world changes. Look at what's happening in the last year. I don't know, 4 years in the world, right? Like it's been like every year, it's like a dog year. It's like tons of things happen. You need to adapt to changes. And why buy and hold if things change? If you have the data, we use a long-term approach. We don't have anything which is short-term approach. All of our theories, including Warren Buffett and all the big guys, Peter Lynch and all the theories, and I'm a professor at university teaching investment, all of them are in the machine. We take the data, we compute it to give you a better results online on a relative basis. The basic idea that we tell you there are 500 stocks, but this one is ranked today #1, and this one is 500. That's the most applicable thing people can look at because all the data is under the hood, but we just show you the end result.
Normally on these episodes with fellow investors and other masters of the market here, what we always talk about is like the process to choose stocks. I just feel like with Finq, this whole process is even out. It's not even a question anymore.
But I would say something about the process. The process is collecting every piece of bit of data. Is it dividends? Is it forward PE? Is the company growing? Has the CFO performed well or he missed his reports? Is this analyst as good or bad? We'll take it that way. It becomes science. Once it's become not science, the process is science, and it's getting better and better because the machine is learning with time. And I think what I would like to say about the process, that every process in the world that you can think of, everything that's done manually, it's done in our machine better. So we don't need a specific process. If we can actually compute all the available data out there.
I'll put you in the hot seat with this one. It's faster, it's better. Is it cheaper?
I think it's cheaper. At the end of the day, you get a very valuable asset, right? Everybody talks about costs. But if I tell you you have to pay, 0.5% management fees or 1% management, but you'll do double the S&P, I think the decision will be easy. So you have to look at the whole picture. Right now, because we didn't get the registered investment advisor license, we're just selling it for $50 a month as a data, and everybody can do whatever he wants with it. So you can go on our website, finqai.com, and look at it and register if you want and pay the monthly fee. And we have a lot of customers onboarding as we speak. But the solution will be that you board our Finq, and we can manage your money. We haven't set the fees yet, but we will once we get there.
Which is absolutely mind-blowing to me.
Yeah.
I want to give you a couple of avatars. One avatar is a young buck like myself. I'm in my late 20s, but let's even go younger. Let's go early 20s and just getting started investing. And the other avatar is actually a investor nearing retirement. How do we use Finq if we're these two different avatars?
Okay, my philosophy in terms of investment is really important for young people. Invest all the money you have in equities, in the market, stay there forever. And this is where Finq comes into place because our machine is endless. It doesn't have a time horizon. It always picks you the best stocks out there in the market. So you don't need to think about selling or buying or getting out of market, getting into the market. If technology stocks will be out of favor, the machine will probably tell you to sell them. It's your settle for it, okay? And again, I think the basic idea of investment is stay in the market. Don't try to time the market. Our machine is always fully on the market because we are not guessing what the markets will do. We react to what markets and information does. Now, in terms of retirement, that's a different issue because there's risk return into it. So it's a more complicated issue. The good thing about people retiring today, they still have 60 years to live. So they're like kids that used to live 100 years ago. So I don't see a big difference because nobody's dying out there. So it's not really a big issue. Well, quite obvious. You need to continue to create a return. So the basic idea that if you're a retirement, you have to get fixed income, it's probably also gone out the roof because we would live, people don't die today before 100, 110. So they have to take care of their finances for many, many years ahead.
I'm sure there'll be some AI health tool or a machine coming out soon as well, if not already there. I want to ask you this because the vast majority of my community heavily into dividend investing and collecting passive income, whether it's monthly cash flow or just the annual cash flow for themselves. Love the idea of FIRE, financial independence, retire early. Do your portfolios help investors like us chase or capture that yield and capture all that passive income?
We don't have that product right now, but it can easily be created. We can create that product because we can see what dividends and when dividends will create a dividend, AI based on dividend stocks. My philosophy is a bit different. I think the younger guys don't need dividend stocks. They need to stay in the market forever. They will make much more returns based on, the returns and the profits, and again, the returns. So I think they have to stay in the market in equities, not just dividend stocks, forever. I think if they choose a Finq first portfolio or a Finq neutral portfolio, which is market neutral, they will make more money than just going into dividends. I think one of the reasons that people go into dividend stocks is because it's a great strategy if you don't have all the information around it. Once you have all the information, we can tell you if this dividend stocks is buy right now or sell, or maybe there's a stock which is not a dividend stock, which is more lucrative right now. So it's a new level of information that takes everything into consideration, sitting above dividend stocks and growth stocks. Those terms are irrelevant once you use AI.
I was gonna say, I feel like having this conversation with you, it's all irrelevant because all the questions that I typically ask, right? It's like, oh, well, AI covers that.
I
And
know.
to your point, I actually just was putting together a video the other day and I measured the performance over the last 10 years with the VOO, Vanguard's S&P 500 fund, and pegged it against VGT, which is Vanguard's technology fund. And VGT delivered, I mean, literally double the returns, all tech oriented positions, shells out a very small dividend. And to your point, I mean, that's what I'm always sharing. If you're younger, you need to aim for the dividend growth stocks. But then we always get into the question of macros. And I feel like this is almost like AI's got it, but like
We
Eldad, do
don't care, right?
macros
I
matter
don't care
anymore?
if it's macro or micro. I kind of collect macro, I collect micro. At the end of the day, I have to create one thing, relative ranking, right? So my philosophy is always stay in the market if you're young. If you're young, always stay in equities, okay? So now I'll tell you what's number one and what's number 500. And if you want to the NASDAQ, I'll tell you what's number one in NASDAQ and what's else. And I can tell you what are the best of both worlds because we collect all the data. A lot of the tools we have today to encompass investing is because we can't encompass all the data. So we have to say, okay, I can't just get all the data and get a decision out there. So I look at dividend stocks, I look at growth stocks. But once you have all the data, you don't need to do that because the REI doesn't really care if it's dividend stocks, the growth stocks. It just tells you today, this stock is better. Let's buy it.
Information is certainly power. I want to ask you this question about your portfolios over there at Finq. I noticed a lot of these portfolios, they all have like 10 positions in them. Why 10? What's the magic number with 10? Because we usually even discuss like what's the perfect portfolio size.
Obviously, once you enroll and pay, you get all the ranking, so you can build your own portfolio, right? So we just show you, the portfolios and help you get it right with the portfolios. We'll send you an email when to buy and when to sell in each portfolio on a daily basis. So we don't have that many transactions, but I can tell you that we have checked returns once we do this ranking. And again, it's a new level, so there's not much research on it because we create a relative ranking every day from 1 to 500, and we check what will be the best returns, and the number 10 wins. So I can't just explain to you why is it the 10. I don't think it's a big difference from our scientists at 15 or 20. But again, we don't even look at standard deviations. We don't look at the risks because we look at it long term. Long term, we want to win the S&P, and that's the most important. Stay in the market, stay there. We'll give you more information than passive investment to make your returns better than the S&P. That's a goal we proved is working, and actually you don't need more than that.
Status quo as we are right now. You mentioned that someone can go to Finq and they can pay the $50. They can get the information. They would technically then have to do their own trading, correct?
Right. That's true for today. They can just send it to their broker because we give you a nice sheet you can send easily or forward your mail to your broker, or do it by yourself. But very soon you will be able to do everything through our system. Once we get the license, You can onboard. We'll do the onboarding through probably interactive brokers or other brokers, and we will not collect the money. So we'll manage the money with your broker on an automatic basis. So it will be easier.
What are some of the most common mistakes you think investors have been making that Finq literally just took away?
Well, investors create feelings to stocks, right? If you don't have a lot of data, not just a piece of data, so you buy, I say I like NVIDIA, right? But in science, there's nothing like I like, right? There's no computer for that. It's a 0, 1, like, not like. Computers don't like 0, 1s. They like a lot of data. So if you don't have data, it's like a very analog world. Once you have the data, we rank everything, and compare it on a relative basis. So what we do, we like the stock, we like the management, we like dividend stocks, we like NVIDIA, we like Apple. That's the mistakes we're doing. Now, we don't have a lot of alternatives to date, right? Because we say we like it and then we follow it. And if we chose right, we'll create some kind of a return. Not that many can beat the S&P, by the way. We do. So I wouldn't say the mistake. It's an alternative that you don't have. So you create feelings to the stocks. And once feelings get into our box here, the box shuts down, right? It doesn't get a lot of inputs. When will our box, the thinking part, will wake up? When something really good or bad happens, right? And then we have to make a decision. But that's not an ongoing process that you can use in math or in science to make it better. So these are the basic mistakes. The other mistake is people get out and in the market, or choose growth stocks or value stocks. Yeah, the value stocks probably in certain times are better, and maybe growth stocks in certain time better, but it's a mistake we are doing because we don't have a lot of alternatives. With AI, a lot of these issues are gone. So it's a new level of thoughts that will really diminish a lot of the mistakes that we do, which we don't, a lot of times we don't have a choice but to choose one of those mistakes.
When it comes to an ETF, as you know, I mean, it's literally the most passive investment you can have. You just throw money in there and we'll do the work. Right now, at least as we stand, there's going to be some work with Finq, and I know over time that will change. Why, when someone's looking right now at ETFs and they're very comfortably suited, say in VOO or SCHD, all these big names that we love, and Finq is coming out of left field, how do we help investors transition from, I almost want to say, the old world or the old thinking of the financial industry into the new realm?
Yeah, well, it will need to, people will need to get adapted, but I think in the next 5 years, we will need to get adapted to a lot of changes in our life because of AI. And I think most of them for the good. But I think that the way I would say to investors is, look, passive investor is great, but what really passive investment tells you that no one can use his mind, right? Because it's passive. There's no thinking. When we're saying, yeah, let's do passive. You don't have to do anything. We'll do it, but let's add some brain into it. Okay, so it's a passive, smart tool. And if you think of it theoretically, if I would tell you, hey, there's tons of money in passive, I would say yes, but there's not really a good passive alternative that really works in a passive automatic way. It gives you the benefits of passive investment with higher returns. So we're creating, I think the world is now creating with AI a higher level than just ETFs.
What's your honest take on all of these option oriented income producing ETFs? Are these scams? Like, does it really come down to the tried and true? Just pick the best stocks.
I can't say that, at the end of the day, people are trying to do something which is impossible, right? All the time, to have a lower risk and higher return. That's kind of, I would say, I talk to a lot of clients. I want really, really low risk, but I want a high return. Now, when you try to push and shove these two, you get some really queer, really strange products out there, and people buy them because they think they're getting something really smart, but they're not, because you can't really undo the risk return stuff. What I'm saying is, if you are young, you don't have that issue, because for if you look at the history, if you look at statistics, the minimum you'll get over many years is like 8% in equities, 8%. We've done much more than that. Okay, it's possible to do more than that. But it's kind of there are products out there. Why there's so many mutual funds out there? The world doesn't need that many mutual funds or ETFs. But there's always that client that you can sell him something new, and he'll think he invented the risk return formula. But you can't do that. So yeah, I think with AI, the number of products will go down because it sits on top of the products. You don't need those products anymore because they can interchange to different faces over time. So you don't need to choose a different style or a product. If at certain times the AI will think that growth stock is better, then it will go to growth and so forth. So that issue is solved as well.
Eldad, does Wall Street know you exist?
Not really yet. Not
I was
yet.
gonna say, because if I was on Wall Street, I would be scared.
Yeah.
So like when that breakout moment comes, how do you think Wall Street will handle Finq and like the magic of AI?
I think, wow, it's a great question. I think the reason it's not there yet is because that will kill their whole business model, right? They can't sell any more thousands of mutual funds to different places. The fees will need to go down. It's a change. It's a huge change. And same thing happened in other industries, like shops, online shopping is changed the shopping world. So, and if you look at content and Netflix, what Netflix has done, or Booking.com for that matter, it's a whole new world. So yes, the thing which is a bit worrisome to us is that the players here are really strong players. They will do everything in their power to not make this work, but we'll give them a fight.
Is it intimidating? I mean, like to be in your position, are you ready to pioneer such a revolution?
Yeah.
Does it scare you? Like what keeps
Oh,
you up
no,
at
I
night?
like it. It doesn't scare me. Doing good never scares me. And I think at the end of the day, it's really hard to stop new technologies. I mean, even if people try, it's not going to work. People will always use the better tools, better technologies. And so fighting it, yeah, they will fight it, but they can't beat it.
What keeps you up at night?
What keeps me up at night? A lot of things keep me up at night, but we're working on making their AI work better and better all the time, because my assumption is that going forward, a lot of people will have their own platform and AI-based decision making for stocks or bonds or whatever, and you need to create enough of competitive edge. So we need to keep on the edge of technology and add more parameters into AI and just be better and better. And if you kind of lose it, somebody else will do better. So that's the new competition out there, and we have to be on the edge all the time.
With all of your investment experience over the last 30 years, whether it was iBanking, VCs, Shark Tank experiences, and now Finq, would have been one or two lessons or perhaps even things that you would have done differently earlier on that would have set you up more for success today?
I would say that, if you're and when you're younger, you look at a lot of things which are irrelevant, but it's really hard to teach that, right? There's a lot of ego stuff going on, and in certain time when you're successful, you look at yourself, you think that it's important to show the world how successful you are, and you buy big cars and big stuff, and another house and another house. I think my lesson would be to any entrepreneur or anyone out there who is successful is to try and fight this phenomena of the ego. I think the ego is a big enemy of humanity. It's a big ego of politics. It's a big ego everywhere and in business. So I think I've won the fight many years ago, but I would give that to anyone to be aware of the dangers of how the ego can kill you.
What's been your best investment thus far throughout your career?
We invested, I can't remember the name, in a small company here in Israel. It was sold to Lucent for $4.8 billion. Both companies were not worth anything. Like Lucent wasn't worth anything, and this was, we made a lot of money. I can't say my best investment was more of luck than anything else, but there is a lot of luck in their business. So I've invested in Checkpoint and in a lot of other companies and made money and so on. I would say that at the end of the day, every time, every investment, you learn something, and so you're getting better and better at it as you move forward. So it really doesn't matter which one were successful or not. It really matters is are you mature enough to learn from them and understand that there's also a lot of luck in the world and not just being smart.
I love that. It goes hand in hand with ego being the enemy and the ability to recognize that luck plays a role. Now, I asked you about your best investment you've made, but I want to ask you just one last question. This was a short, sweet, and simple. I mean, really, think AI oriented masters of the market chat really is that simple. But if I were to give you $10,000 right now, and I'm sure you'd ask Finq AI, right, to do its magic, but what would be the one stock out there? If you had to go all in on just one company and $10,000 in, what would it be and why?
Well, I hate that question, and I understand why people want it because I don't think it's smart to invest in one stock. But I would say that today I would probably do Microsoft. I think their Microsoft is a solid company, and AI will do them really, really good. I think they're a big player in many, many markets, which are all growing, like the cloud and the SaaS model, and a bit different than other players or in a more mature market. So one of the big players in the mature companies, they have a 10-year, 15 years of nice growth ahead of them. And it's kind of easy for them because they are kind of a monopoly. So, not that I like it that much, not that I love their products that much, but I think they're on a route with AI to do really, really good in terms of business.
Investors, we have on with us right now Eldad Tamir, the founder and CEO of Finq. You have to go over to Finq's website and check them out. I am positive you will find something that you love or blows your mind. That is why I invited Eldad onto the show. Eldad, I once again want to just say thank you so much for joining us here on Masters of the Market. Hopefully, we get to have you on again for probably an
Sure.
even simpler conversation as AI improves.
Yeah.
But thank you so much. And investors, until next time, we will see you all there.